Hello everyone, this is John Muntz with Dealer's Edge. I want to welcome you all to our ongoing series of workshop summaries where we take one of our full-length online workshops and produce a shortened video summary of the material provided. We typically host 3 to 4 full-length webinars a month that usually run about an hour's time. In case you haven't heard of us, Dealer's Edge is a firm dedicated to informing dealers and dealership management on topics relevant to your bottom line. We are always producing new content via our online workshops, webinars, manuals, books, and summary. For this summary, we are talking about dealership buy-sell decisions with Alan Haig of the Haig Partners. Dealer's Edge members have access to the full 1-hour workshop as well as the executive summary in PDF format, which is what is being read here, not to mention hundreds of other topics targeted to dealership owners and managers. Rob Keeley, an industry expert himself, wrote the summary, and the narration is done by Darius Jackson. All relevant links will be in the description below. Please remember to like, comment, and subscribe to stay informed of new releases. So, all that aside, let's get into it.
Dealer's Edge, Executive Summary, Checklist, Decisions, Buy, Sell, or Hold in 2021. Sir John Templeton famously said, "The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell." And 2021 appears to be full of optimism. And as auto dealers appear to be taking Templeton's advice, they have spurred a red-hot buy-sell market. How hot is it? A simple Google search gives a glimpse of the enormity of the activity, with Automotive News reporting that at least 165 mergers and acquisitions of various sizes through August 18, 2021. So is this your opportunity to sell? Or might you be a buyer? Or is the best strategy to just sit tight? One thing is for certain, be sure to consider all perspectives. Alan Haig of Haig Partners joined us for an online workshop to share his thoughts on current trends in auto retail and the buy and sell market. Haig Partners is the leading buy-sell advisory firm for owners of higher-value dealerships and dealership groups. They have been involved in the purchase or sale of over 270 dealerships since 1996, for a total value of over $3.5 billion, excluding inventories. More than any other team in the industry. This report is a summary of Alan's comments and suggestions. You got to know when to hold 'em, know when to fold 'em. Kenny Rogers. Alan Haig of Haig Partners has a front row seat to this brisk M&A market. With so many considerations and perspectives, you need all the facts. The takeaways from this workshop are: what does the future hold? Is this a limited opportunity? Succession questions that need to be asked. Should you buy, sell, or hold? The current situation in auto retail. Chip shortage has hindered recovery. Since 2009, the automotive market has been chugging along at a nice $16 to $17+ million clip, even more when fleet is included. That was until the pandemic hit in early 2020. Like the rest of the economic engines, auto plants scaled back as they reoriented themselves to deal with worker and part shortages. But after a slight blip, demand came roaring back, and now OEMs are faced with a shortage of parts, primarily microchips that are necessary for today's automobiles. Alan noted that the analysts were predicting production of about 16.6 million, but that all changed, and predictions for 2021, if they give them at all, are now around 14.4 million units. And while production shortfalls are expected through 2022, the reduced inventory has taught us that less is more, with dealers reporting record profits. New day supply has been cut in half. With a new vehicle days supply restricted and little change predicted for the near future, this lack of inventory is impacting the profits of dealers and OEMs. Used days supply is in line with 2019. On the bright side, the supply of used inventory is trending up relative to 2020. However, Alan cautions that if new production does not increase as expected, this trend may reverse as customer demand for used substitutes ticks back up. New PVR hitting all-time highs. The result of low supply and high demand has not surprisingly boosted new vehicle selling prices, increasing average gross profit for the public companies by 69% compared to 2019. It should be noted that the public companies include other vehicle income, all incentives, etc. Used PVR hitting all-time highs. The law of supply and demand is playing out in the used market as well. And while 49% profit boost is nice, Allen is of the opinion that it could get even better in the second half of 2021. Average F&I PVR hitting all-time highs. While F&I is less variable than unit supply, the upward trend for the past decade has continued. Allen suggests that the increase is driven in part by three factors: increased amounts needed to finance increased vehicle prices, increased leasing, increased interest in service contracts as customers conclude that they may be keeping their vehicles longer than expected, combined front and back gross profits. Between new, used, and F&I, the profit picture is looking rosy. Fixed operations have almost fully recovered. After a significant decline in 2020, fixed operations profits have recovered nicely. However, part shortages are hampering operations, and slower vehicle sale does not bode well for long-term traffic growth. Expenses are down. The other piece of the profit picture shows the change in the expense structure from 85.1% in Q2 2020 to 69.6% Q2 2021. Allen noted that the biggest decline is on the discretionary SG&A category. Dealership profits are soaring. As dealers adapt to the changing landscape, operating profits, excluding PPP, are up 120.8% over 2019. Current buy and sell conditions. Acquisition appetite is strong. Compared to Q2 2020, Q2 2021 rooftop acquisitions have increased 43.8% for privately owned dealerships and a whopping 1,260% for public companies. Allen anticipates that this will continue through the fourth quarter. Public company spending has exceeded $1.9 billion. Since private spending cannot be accurately tracked, public spending is used as a proxy. Public company spending on U.S. auto acquisitions in year-to-date Q2 2021 exceeded $1.9 billion, which is 750% more than year-to-date Q2 2020. While a lot of this is due to Lithia's aggressive growth plan, it is not the whole spending picture, as other public companies feel compelled to add to their portfolios. How do we value dealerships today? The question is that, given today's elevated profits due to restricted supply and uncertainty about when production will return to normal, how does one accurately value dealerships? Allen is of the opinion that profit peaked in July for the average dealer and that continued inventory problems will cause it to go backwards. So, if as many believe, the next 3 years will be similar to the past 3 years, fair valuations will be around the 3-year average, in this case about $2 million. It is very likely that as production returns to pre-pandemic levels, pent-up demand combined with low interest rates, employment, and wage growth will carry sales through 2023. Hague Partners Blue Sky Multiples, Q2. While multiples increase from 2019 to 2020, they remain relatively stable for the first 2 quarters of 2021. But just as housing prices vary by location, condition, and other variables, so is it for dealership valuations. Factors impacting multiples. Things that increase multiples are underperforming stores that can quickly be brought to profitability, metro markets where there are more buyers, rapid growth markets, low tax markets, low real estate costs, geography well suited to the franchise, i.e. Texas and trucks. Similarly, there are factors that decrease multiples, dealerships that are not marketed properly, facility issues/upgrades required, rural areas, slow, negative growth markets, high tax markets, add point risk, high real estate costs, over-dealered markets. Blue sky values are at record high levels. Over the last 10 or so years, the average blue sky value has trended up and is now at around $10 million, or more than 50% since the pandemic hit. Allen observed that it is unlikely that dealerships will ever be at these levels again anytime soon. And even at these elevated prices, buyers are still able to make a reasonable return on their investment. Public retailer valuations are strong. Using public retailers as a barometer, owning a dealership is a good business to be in, with stock price returns outpacing the S&P 500 by wide margins. Conclusion. In closing, Allen noted that it is a good time to be in the auto business, whether you choose to buy them, sell them, or hold them.
Okay, that's going to do it. Again, this was just a summary of the material provided. The full workshop goes into much more detail. Please check out Alan Haig and the Haig Report at Haig, that's Haig, partners.com. Our writer Rob Keeley's info can be found at fixedopsolutions360.com. And to look into becoming a Dealer's Edge member, it's dealersedge.com/VIP. All links will be in the description below.